Welcome to the live stream. Silver has been whipsawing over the past 6 hours, and we're going to get into this. And I'm going to show you, stay with me, because I'm going to show you in this live stream that over the next 3 days, the next 72 hours, silver is going to keep climbing higher and higher. And here's the data that shows why. First, you have to understand that just for the past 12 hours, let's look at that first. Silver delivered one of the clearest structural signals of upward continuation, rather the opposite of exhaustion, right? Rather than exhaustion. So what we've seen is we saw silver spot surge to touching $90 an ounce. Everyone was excited. And that represented a 4% increase. Now, listen closely to this, because even though it's a 4% increase and people are screaming from the rooftops saying that we've hit a brick wall, we have not hit a brick wall. This move did not emerge in isolation. That's what we all have to realize. It did not come out of nowhere. It occurred immediately after a tariff-driven volatility cycle. It came after a geopolitical escalation, a renewed safe haven demand. That's what we've been seeing. And all of this is unresolved. That means that pressure, that momentum, it's still there. It's not resolved. And the implication really for the price of silver is profound. If you're new to this live stream, I post a live stream daily, every day at 9 p.m. Eastern Time to show you what's going on with the price of silver in the market that day, 9 p.m. Now, the price action that's unfolded just over the past day and a half, what it shows us is that there's a structural accumulation rather than any speculative exhaustion that you may hear. And when precious metals break higher after this kind of volatility reset, the probability of continued repricing increases substantially. And that's what we're going to see over the next 72 hours. This is the pattern of silver. To understand why this matters, it's necessary to look at the sequence of events that preceded this move. And in the last several days, silver surged more than 6%. That's the kind of surge that we want. More than 6%. And that's in single sessions following, of course, the tariff escalation headlines. People are looking for the safe haven assets, and they're finding it in silver, right? We're talking about institutional repositioning. We're talking about pulling money from any kind of risk asset and putting it into that safety asset of silver. Now, tariffs introduce inflation risk. They disrupt global supply chains. They destabilize currencies in a time period where currency is already destabilized. But all of that is happening simultaneously. The disruption of the supply chains, the inflation risk, and the destabilizing of currencies. It's like a trifecta coming straight at silver. And over the next 3 days, we're going to see this continue to play out. Now, these forces directly increase demand for monetary hedges, of course. And more importantly, tariff shocks create a sustained uncertain premium rather than a temporary one. That's what happens. Once premiums become effective, they don't move away so quickly. And we've seen that in silver. If you've even just been stacking silver the past year, past 2 years, or if you're just looking at China this week, those premiums are not going to go away anytime soon. China's a what, $9, $10 premium right now compared to the US. Now, markets cannot immediately price the long-term consequence of these global trade disruptions. We have to see how it plays out. And forcing capital into assets, pulling capital out of risk assets and forcing it into safe haven assets, that is really, it gives people the capability of preserving their value when everything is so unstable. Now, again, last 12 hours, last 18 hours, what we have to see, and again, I post this live stream every day, 9 p.m. Eastern Time. Really log in, 9 p.m. every day. I'm going to break down the silver price of that day every day. So don't miss these live streams. So when we look at the past 18 hours, we have to view this as part of a broader repricing cycle that's driven by macroeconomic instability rather than any isolated rally. That's what we have to see. There's moving pieces, large, massive macro pieces that are causing this metal to move. And silver's recent volatility has been accompanied by these persistent structural deficits in the metal. We're headed for, listen to this, if you haven't heard this before, you really need to keep this top of mind. We're headed for the 6th consecutive year of a supply shortage in silver. That truly is what's gotten us to the price that we have today for this metal. It's the structural deficit. There's simply not enough silver to meet the demand that we have for this metal. And that demand is not coming from you and I silver stackers. It's coming from industry, solar, electronics, AI. Everyone's on AI, and AI requires silver to function. So until those industries find an alternative, which is not going to happen anytime soon, silver is what's needed. And this is the 6th year where we have a supply shortage. And that shortage, this is just an estimate. It's estimated between 67 million and 120 million ounces this year alone. Now, this supply deficit really changes the nature of a price pullback. Because 5 years ago, 7, 10 years ago, we would see much more volatility in silver. We didn't have this, the industry requirement for silver like we have now. So the price pullback was much quicker. But now this deficit, this enormous deficit, it really changed the nature. In a surplus environment, what we see declines signal that excess supply is overwhelming the demand. But we don't have that now. And in deficit environments, we see that declines signal temporary repositioning rather than an actual structural weakness. We're seeing just a temporary reposition, and that distinction is really essential. Really wrap your head around this. Listen closely, because if you're wondering where the price of silver is going, you need to follow this. And again, tune into this live stream every night, 9 p.m. Eastern Time. I'm breaking down the silver price of that day every day, 9 p.m. So supply deficits impose this structural floor. And everyone is talking about Trump placing a floor for critical minerals, critical metals, and silver is part of that. Everybody's talking about a floor on silver. Well, the deficit alone imposes a structural floor beneath price, and that forces downward movements to stabilize more quickly than they otherwise would. Now, I'm going to explain this in plain English. If you are part of the solar industry, if you're part of the electric vehicle industry, you need silver, period. So you may whine and complain that you wish that silver was cheaper, but the bottom line is you need it. So you have a floor. You have a certain amount of silver that you need for your industry to keep going. So it's a built-in floor for silver. And good news for you and I as silver stackers, hooray, because that's keeping the value of this metal up higher and higher. If your buy price as a silver stacker, as someone buying actual ounces of silver, if you feel like your buy price is $50, good luck waiting for that to happen again. $45, $40, we all wish, in hindsight, that we had got in on silver back then. But for you and I, as old-timer silver stackers, we've been in this game for decades, sure, we're smiling with a big smile because we started accumulating silver when it was, some of us, single digits. I remember complaining that silver's $12, $13 an ounce. I wish it would go back down to single digits. that's the give and take that we have to go through. Now, the most compelling signal for the most recent 12, 18 hours in the market is the market's reaction to profit taking. Again, this is really key. Lean into this and really look closely at how this works, because it's going to help you understand where the price of silver is going. Profit taking is often misinterpreted as just a bear signal. People feel like, oh, silver's it's at 87, it's at 90, it's at $95 an ounce. It's not going to go any higher. I'm going to take my profits now and I'm going to leave. But in reality, it frequently represents the transition from impulse to consolidation. And consolidation is not a term that we hear often, but we really need to understand this as silver stackers. What happens is, after silver surged, just look at this recently, just after it surged rapidly following the tariff escalation. Profit taking pushed the prices briefly lower, with spot still, it was falling. It was about $87, kissing a little lower than $87 an ounce, and then it rebounded strongly. And this pattern, really, it's structurally bullish. You could look at all the charts you want, but I'm just going to explain this in plain English so you understand where the movement of this price is going. The pattern is structurally bullish, and in sustained uptrends, price declines tend to stabilize quickly because underlying demand remains intact. There's a demand that's not going away, it's still there. And the speed with which silver recovered and advanced above those previous levels, that's what shows you how this works. That confirms that buyers remain engaged. The other part that we have to look at in terms of wondering if silver is going to drop down, go back down to your $50, your $40 buy price, is the premiums. Many silver stackers have this mindset that premiums remain high because your local dealer needs to keep the lights on. They are living off of thin margins, which is true. Yes, all of that is true. But what's really happening, again, I'm posting these live streams every night, 9 p.m. Eastern Time. I'm breaking down the silver market, what's happening in that day, the day you're watching. So don't miss these live streams, 9 p.m. every night. What's really happening is not so much the premiums remaining high, meaning like the spot price is $80, you go to buy an ounce of silver and your dealer says, okay, I'm charging you $90. It's a $10 premium. I can't believe I'm even saying that, but that's the reality of today, a $10 premium. It's not so much that the dealer, their margins are being squeezed and they need to get by. That is part of it. But really, it's the underlying demand from the industrial use of the silver that has not gone away, and it's still strong. And that's really what a lot of high premiums and the maintaining this high premium, that's what it's showing us. This pattern of this rapid recovery is really consistent with historical repricing cycles, because we've seen this before. When silver surges on a macro catalyst, like we're seeing, geopolitical issues, tariff issues, and then we see subsequent consolidations above those support levels, meaning the key support level could be, today, it could be, at the time of this recording, it could be $80 an ounce. That consolidation phase typically serves as preparation for continued upward movement. It's gonna hit that support level, and like a trampoline, it's gonna bounce back up. And when you look at this technical analysis, I'm not gonna get too technical. I want to explain this in plain English so everybody understands. When you look at this, it really reinforces the interpretation, because silver remains well above its 50-day exponential moving average, which is near $80, it's a little like $8.20, right? And also its 200-day moving average, which was around 57. Now, that confirms the persistence of a broader bullish trend. That's what it does. And moving averages represent long-term equilibrium levels. When price remains significantly above these levels, it tells us that we have sustained demand rather than any kind of speculative excess. This is the new era for silver. We didn't see this 10 years ago. 15 years ago, certainly not. That sustained demand is really new, and that is the force that's pushing silver. Look, we see estimates of silver reaching $200 an ounce by this summer. By the end of 2027, $350 an ounce. That's what people are looking at. And it's because of the sustained demand. You just can't get past that. So this institutional positioning for this metal, it also supports the argument for the continued price appreciation, but it also shows that silver's futures markets are represented as a massive leveraged exposure, with really price discovery driven largely by the institutional participants rather than you and I as silver stackers. And when I say institutional participants, I mean, we're looking at a small, this market is so small. Silver is such a small market. There's like 8 main players that we're looking at, and we'll get to that in a minute. Hopefully I could squeeze that into this live stream. So when institutional capital begins reallocating into silver, the resulting price movements tend to persist for long term. It's not just a quick hit. And this is because institutional capital operates on long-term horizons rather than a speculative trade. Someone who's just trying to get in and get out, those people should stay with equities, right? They should stay with a much larger market than silver. Again, I'm posting these live streams every night, 9 p.m. Eastern. I'm breaking down the day's happenings in silver. Don't miss it. Every day, 9 p.m. So what we're seeing is, of course, tariff escalation, geopolitical instability, monetary uncertainty, the weakening of all these monetary tools, and that's not going anywhere. Those are not, listen to me closely and really understand this, keep this straight in your mind, those are not short-term events. They don't come and go just because Trump is going to eventually leave office and somebody else new is coming in. These are really structural issues. And they're structural shifts with multi-day and multi-week implications. This is why the next 3 days, we're really going to see strength in silver. We have global macroeconomic conditions that continue to reinforce the importance and the value of silver as a safe haven. Everyone's staring at the Middle East. Money is going to go into silver. That's just how this works. If it's not the Middle East, it's Argentina. If it's not Argentina, it's Greenland. Wherever we have this geopolitical unrest and uncertainty, money is going to start to move into the safe haven of metals. And presently, at the time of this recording, everyone's staring at the Middle East. You combine that with the implementation of these global tariffs, and that introduces persistent inflation risk. And when we see this historically, that increases the demand for monetary hedges like precious metals, the safe haven of precious metals. Tariffs function, really, what their function is it's an indirect tax. Think of it that way. It raises the cost of imported goods, and it increases inflationary pressure. And inflation erodes the purchasing power of fiat currencies. That's simply how it works. And as that fiat currency loses its power, its purchasing power, people turn to the safe haven of silver. Of course, that's how this is going to work. And inflation has always shown that. And it also increases the attractiveness of pulling money from any risk asset and putting that money where it's treated best, which is in silver. And of course, we see this the opposite way. The dollar shows strength, then money suddenly is pulled from silver, it's pulled from gold, and it's sent in to more risky investments. But right now, presently, today, at the time of this recording, silver is the safest place for these institutional players to put their funds, because we have this dual role of industrial input and a monetary hedge with this metal. Now, the equity market and the instability within the equity market, it adds another layer of support to the silver price over the next coming days. In this live stream, I'm going to argue and tell you that silver is likely to increase greatly over the next 72 hours. And I'm showing you the parts that you need to be watching for. Every night, 9 p.m., I post these live streams. Every night, 9 p.m. Eastern. Don't miss them. Tune in. Now, we have recent global equity declines. We have combined with that persistent geopolitical uncertainty that's not going anywhere. We have an increased demand for defensive assets. And when equity markets experience volatility, institutional capital often reallocates into precious metals to reduce that portfolio risk. Nobody wants a lot of risk with their money. They'll take a little risk, but nobody wants too much risk. And they're going to go into silver. Now, this defensive reallocation of it reinforces again that over the next 3 days, silver is going to move higher and higher. Another critical factor, and this is supporting the bullish outlook that I'm arguing, and listen closely to this, really lean into this, because it's the structural deficit between what we have in COMEX and the actual silver that is truly available. And that ratio presently, at the time of this recording, we're looking at 9 to 1, at least close to 9 to 1, even if it's still 8 to 1. It is really a big difference. That means the amount of paper silver compared to the physical silver that is available to be available for delivery, the actual physical silver compared to the paper fake silver that is being traded constantly. Now, I'm going to break down exactly what silver did over the last hours. Silver has demonstrated a pattern that historically precedes continuation rather than exhaustion. That's really important for us to understand. Really lean into this, because we're looking at continuation over the next 48, 72 hours, not exhaustion. And here's why I could say this. We've got rapid directional expansion followed by intraday stabilization near these session highs. I'm going to explain this in plain English so you can understand. If you're new to this live stream, I post live every day at 9 p.m. Eastern Time, and I break down the day's movements in silver so you know when the price of silver is going to move and you know when you should jump in or jump out. Don't miss these live streams, 9 p.m. Eastern, every day. Now, the metal traded within an unusually wide intraday range. We started off at about $86.50. We went up to a little over $91. And what that reflects is that it's both aggressive accumulation and it's elevated volatility. And when those two combine, historically, again, we look at the pattern of silver constantly. That tells us that this metal is going to move up. And this type of range expansion signals a repricing, and in fact, a structural repricing rather than any speculative excess, meaning we're not looking at people jumping in to get fast cash. We're looking at an actual structural repricing. And that's why in this live stream, I've been talking about the institutional foundation of silver, this industrial demand, right? This is not speculation. This is actually industry. And we see that when we look at the premiums being strong, particularly in Asia. When China has $10 premiums above spot compared to us, that tells us that the demand is there. And really, what we have to see within this range, this volatility that we're having the past few hours in silver, is that we get this upper boundary of range that becomes the focal equilibrium point. This is what traders look at. By late trading, silver held firmly above $91, above $90. And that confirms that buyers were absorbing the selling pressure. They were not retreating. They're absorbing it. This is the kind of intraday behavior that is so critical to understanding where the price of silver is headed. Markets that reach extreme levels and then fail to sustain, they typically reverse quickly. And of course, we see that with silver often. But silver has instead stabilized near its highs. And that tells us, that indicates that the structural strength is there rather than just a temporary enthusiasm for people trying to make fast cash profit take. That's not what we're seeing. Now, leaning close to this, really keep this top of mind, this part, because the most significant price event in the past 5 hours was its decisive break above the $91 level. And I'm going to explain this clearly for you. If you're new to this live stream, again, I post this live stream daily at 9 p.m. Eastern every day. I'm breaking down the day's movement in silver so you know where this price of silver is heading. Now, this $91 level marked its highest intraday in several weeks. That's a move that occurred not during liquid overnight conditions. That's not what happened. We're not looking at illiquid conditions. But it occurred during active global trading hours when institutional capital is the most engaged. And when price expansion occurs during these peak liquidity windows, what it tells us is that it reflects intentional repositioning. It's not random volatility. This is absolutely intentional. And when I say that word intentional, I'm not talking about the manipulation of silver price. I'm talking about institutional investors. I'm talking about the industrial demand that is keeping this metal so high, the price of this metal so high, and the momentum that's going to push it past 100, past 120. That's where we're headed. Now, when we focus on the next 48 hours, 72 hours of this metal, really look at the institutional investors because they do not accumulate exposure passively. They act during periods of sufficient liquidity to absorb large order flows without destabilizing the price. And the timing of silver's breakout really, it confirms that major participants were actively increasing their exposure rather than merely reacting to any external catalysts. When I say external catalysts, I'm talking about safe haven moves. They're not reacting to that. We're talking about industry right here. And what makes this breakout particularly significant, check this out. It's the relationship to the recent equilibrium zones. And we hear that phrase passed around, the equilibrium zones for the silver price and silver market. I'm going to explain this in plain English so you could really understand this and take away some knowledge that you can use when you're looking at the price of silver and trying to figure out where it's headed. Should I buy? Should I sell? Should I get out? Just look at the past 24 hours. This is the best way to understand this. Silver closed near $87, meaning today's move represents a repricing of more than 4.5%. That's within a single day. That is a nice jump. And that's a rate of appreciation that rarely is sustained without any continuation. Typically when we see this, it keeps going. And when we have rapid repricing compression like this, the equilibrium of the market forces participants to reassess their exposure. It causes them to pause, stop, try to figure out if this is a real risk for them or not. Now, at the top of this live stream, I talked about all the geopolitical tension that's going on. I talked about the devaluation of the dollar. I talked about fiat currency losing its value. Those are the kind of, I talked about equities in general. Those are the kind of risk exposures that people pull from when they go into silver. Well, that's not what we've seen. We saw the opposite in the past 24 hours. Those who are positioned below current levels, they need to decide, and this is what we saw in the past 24 hours, they need to decide whether to exit or to increase their exposure to maintain a relative position. And that's the decision-making process that often drives a continued momentum. When we see this pattern of silver, when we analyze this over the history of this metal, that's what we see. And that's what you want to see, continued momentum. Because the easiest path for participants seeking exposure is to enter at progressively higher prices. That's the easiest. Not for you and I, silver stackers, the price is high. We actually become observers more than people participating. If this is helping you, remember every day I post a live stream at 9 p.m. Eastern, breaking down the day's silver moves, how that price moved that day in the market, so you understand in plain English where the price of silver is going. Every day, 9 o'clock. Check out this live stream on Pound of Gold. Now, the structural interpretation of this move is really important. And I know these phrases, structural interpretation, make people glaze over. It's hard to figure out what this language means. I'm going to explain it to you because it's really key. Check this out. When we have this structural interpretation of a move in silver like we've experienced today, it really becomes clear because when you view this through liquidity dynamics, the liquidity does not represent static availability of capital. What it represents actually is the willingness of participants to transact at specific price levels. And the best way to think about this is to think of you and I as silver stackers. We have our price levels. We have our buy price. We have our sell price. We have a buy price that may be unrealistic, honestly, because I'm just like everybody else. My buy price lately in my heart has been $50, but silver is not dropping down to 50 again. Sorry, those days are gone. Some people have a buy price in the $40 range. They think it's going back down to the $30 range where we were at 2 years ago. I don't see that happening. This mindset of having a price to move, it works the same for traders that impact this price of silver. It's just relative positioning. That's the same idea. And the decision-making process often drives this continued momentum. because it's just the easiest. Now, when prices rise rapidly and they remain elevated, it signals that sellers are unwilling to provide liquidity at any lower levels. They're not going to do it. They're holding, basically, just like you and I hold silver. And it's this unwillingness really that creates this structural scarcity for this metal, for silver. Scarcity does not necessarily reflect a physical supply limit. It does not necessarily, I'm going to say that again because it's so key, it does not necessarily reflect physical supply limitations, but rather what it really reflects is positioning constraints. And again, the best way to understand this is to think of you and I, silver stackers. We are constrained when we have a buy price. Look, I'm not buying until silver is at this certain point. It's the same thing for trading silver. And when fewer participants are willing to sell, the price needs to attract liquidity. This is the dynamic. And this dynamic was evident throughout today's trading session. We saw it, where we saw attempts to push silver lower, but it was met with immediate buying pressure. And that is keeping the value of this metal and the price headed up. And that's my point in this argument, is that over the next 48 hours, 72 hours, we're going to see silver continue to reach higher. Now, the past 5 hours have also, listen to this, they've also revealed an important divergence between silver and other assets. This is so important to understand when you're looking at the price of silver, because silver is a small market. And compared to other assets, compared to other options that anyone has to invest, I'm looking at equities, right? That market is the global equities. I mean, it's trillions of dollars. Silver is in the billions. I mean, it's really it's a small market. And when you understand how sensitive silver is, because it's such a small market, it really gives you a big clue about where the price is headed. While gold rose modestly today, over the past 6 hours, silver actually outperformed significantly. It gained more than 3.9%. And it traded, at the end of the day, we were reaching for $91 an ounce. This outperformance tells us that silver is not merely following broader precious metals trends. It is not following gold. It's not waiting for gold. You remember, if you've been stacking silver, you remember 2 years ago, gold was moving up and everybody was saying, see, silver's dead, man. It's dead. It's not following gold like it's supposed to. If you've been stacking silver since then you remember those conversations. And full disclosure, I felt that same way. I felt like, what is going on here? Gold is moving. Why isn't silver moving? Well, that's another conversation. But for today, when you look at how silver moved today, what it signals is that silver is attracting independent capital flows. And guess where that capital is coming from? And guess where it's going to? It's going to the industrial use of this metal. We did not have this before. This is why this is a new era for silver. The money is going to industry. And that is pushing the price up. It's going to solar. It's going to AI. Anybody who goes to ChatGPT, you should be happy going there if you're a silver stacker, because that is going to keep the price of silver going higher. AI, all that technology, it requires silver. Now, this divergence that we're seeing between any correlated assets, it signals this reallocation rather than a general market movement. And when one asset begins outperforming, particularly if you're looking at gold versus silver, silver versus gold, it reflects a preferential allocation by the market participants. And when I say participants, I mean mainly traders when we're looking at today. Now, this allocation is reinforced by all the technical momentum signals. We've seen it. We see every chart is showing that. And silver's breakout above $90, above that resistance, it eliminated a critical psychological barrier. You cannot roll your eyes when you hear that phrase, psychological barrier. It's really important. If you're new to this live stream, please, I want to remind everybody, 9 p.m. Eastern every day, I post this live stream breaking down the silver moves, the moves of the silver market in the day, breaking it down in plain English so you understand where this price of silver is headed. Every day, 9 p.m. Eastern time. So this psychological barrier is so important because that helps us break through price levels that really make no sense. And the greatest example of this is when we broke through $50. Silver hovered between $20 and $40, it felt like, for a decade. I mean, it was just not moving. And nobody felt this pain more than bullion dealers, particularly online bullion dealers the past couple of years, because they invested millions of dollars into their business to sell silver, and the price just would not move. They needed to get their money back. Finally, now that we've broken past 50, it's just the sky's the limit. And that was really a psychological barrier. That phrase, psychological barrier, we use that a lot in terms of the jargon of the market, but that's all it means. It just means that it almost is a rule breaker, because when silver breaks through these barriers, people, it's in a way a fear of missing out, but on the industry level too, and on the paper trade level too, people just pile in and we blow higher. That's how we got to $117 an ounce, $120 an ounce. Now, the pattern that we saw today, when we're looking at intraday trading patterns, it also reinforces this, because after initially breaking above $90, silver retracted. It went down toward $89, and then we got a rapid recovery. And what that tells buyers is that we're actively defending the elevated level. That's what we're seeing. And this pattern is characteristic of an accumulation phase rather than a distribution phase. And to understand the difference of those two will really help you as a regular person buying silver, waiting for the spot price to get to where you want it to be. When you understand the difference between a distribution phase and an accumulation phase, it'll really help you get this. Because accumulation phases are marked by rapid recovery following temporary declines. I'm going to say that again so you really get this. Okay, listen closely to this. This will make sense. An accumulation phase is marked by rapid recovery followed by temporary declines. And that's exactly what we witnessed today, about 4 hours ago. Silver's behavior over the past 5 hours just aligns clearly with this dynamic. And the critical factor here influencing the trajectory of silver really is beyond psychological level. It's the macroeconomic uncertainty, the safe haven demand that's increasing with all this persistent trade instability, the persistent geopolitical tensions. The word persistent is just perfect for this, because we're talking long term, and long term is exactly what keeps the price of silver moving up and up. These aren't short-term fixes. Nobody's putting a Band-Aid on the Middle East and suddenly people are not looking for safe haven demand anymore. No. These are persistent problems, and it's persistent uncertainty, and it's going to keep silver going higher and higher. Even the momentum, all those indicators, the technical indicators that we study, they also support this argument that I'm making to you for continued upward momentum. They also support this argument because recent analysis indicates that silver has established higher lows and remains within a bullish trend channel. That period, that's where we are. All of those projections, they're looking at levels of above $100. You should be happy to hear that. But that's what all of these charts are saying. That's what all this analysis is saying. We're looking at moving over $100 an ounce. And it's this progression and all of this speculative enthusiasm that's keeping that going. Now, another crucial development in the past 5 hours is the behavior of the intraday volatility itself. Really keep this top of mind, because this is so key this week when we try to understand where silver is headed. Again, I post this live stream every day, 9 p.m. Eastern Time. I post this live stream breaking down the movement of silver price throughout that day, help you understand where the price of silver is going so you know when to buy, when to sell, how to keep some cash in your pocket. Now, today with this intraday volatility, what we saw is really an expansion that often precedes continuation rather than reversing the price. And that should be very exciting for every silver stacker. That's what you want. You want expansion. You don't want any reversals. Although part of you may feel like, oh, I want a reversal because I want a cheaper buy price. Well, you want this value of this metal to keep going up and up. And silver is stabilizing above $90, despite significant volatility, suggests that participants today are adjusting to a new equilibrium rather than rejecting the elevated prices. In plain English, that means that they're accepting that this is their new reality. This price level is their new normal. Check out my sponsor, Money Metals Exchange. They have a contest where every month they give away 20 American Silver Eagles. 20 Silver Eagles every month. I'll put a link down below. Check them out. It's a great company and a great contest.